Hey guys, this is John McNamara, host of Running Vegas. We're talking local sports, business, real estate. I'm with my co-host, Mr.
Rodrigo. Always a pleasure to be here, sir. Thank you.
Thanks for being on. And we got a special guest today, Mr. Derek Parent with Direct Mortgage and owner of Movement Fitness.
Thank you. I'm grateful to be here.
Yeah, we're excited to have you on, man.
Yeah, very excited.
Excellent. Okay, so tell us a little about you, Derek. You know, why'd you move to Vegas? You're in the lending business. Let's get to know you a little bit.
Yeah, so funny story. I moved here in April of 2000. I won a trip from a place called Conseco Finance, came to Vegas, getting ready to leave to go to the airport. Go to get into a cab, and the cab driver's like, "Where you going?" I'm like, "Boston." He's like, "No, you're not." I'm like, "Yeah, I am." And he said, "No, there's a blizzard." And no one back home told me that there was a blizzard, nor did I check the weather back then. So I ended up staying in Vegas for a few more days. I went to go visit the company that I was working for called Conseco Finance. I asked the young lady who was the manager there if I can come back and work. Yeah. She said yes. So that was in February. And April 1st of 2000, I moved here. Literally 28 days after visiting, I came back, and I've been here ever since.
Wow.
Love Las Vegas. 24 years I've been here.
Wow, so you've seen it all.
I've seen a little bit, yeah. I've seen a little bit. I wish I said I could see it all, but I've seen since from 2000. You know, when this area here was really nothing. This was all dirt.
Yeah. I remember. I moved here around the same time, December of 2000. Well, so a little bit close to the end of the year. Cool. But I relocated from Lima, Peru at that time. So I'm kind of same, 24 years here.
It's a great time. One of my best friends from Peru.
Nice.
He always tried to get me to go to Peru chicken with him.
Oh man, the best rotisserie chicken you'll eat, so, for sure.
That's We're gonna have to try it.
Oh yeah.
So I'm curious because I'm gonna be honest with you. You're the first guest that I've had on that's been in the business long enough that actually experienced the Great Recession.
Yeah.
So how was that experience compared to now? Because in lending and real estate, we got a lot of doom and gloom going on. It's the worst thing we've ever seen. We can't sell houses. But what's your take on everything that's going on right now? And you know, what was your experience back in 2009, and how'd you get through it?
Yeah, well, I'll tell you what, when I moved here, the median home price was somewhere low, like around the 120 mark, 140, so it wasn't really high. And even over the years, it didn't jump up as dramatically as it did, and then go up to 06 when the height of the market, and the market crashes. And when the market crashed, the difference between the market crash and then and where we are now was when the market crashed then, there was no banks lending, right? So there was a thing called mortgage implode, and every day you would look at it and a new bank would go on there, a new bank closed down. It was like Lion Financial, Freedom, all these companies were closing down, and it hit almost 700 plus banks closed. Wow. So at that time, there was actually not a lot of lending. It was really strict, right? There was some FHA stuff around, but it crashed so bad that a lot of homes were $80,000, $120,000. Yeah. So stuff that was $500,000 had dropped down so much, right? Yeah. Fast forward to now, lending is really good, right? The difference is we have higher interest rates. But I can tell you, back in the 06 days, the rates were 6%, right? 6-7%, right? I remember sitting at a table talking to a client of mine, and the rate just had hit 7. He was like, "Hey, you think now's a good time to buy?" I'm like, "Yeah, right," because back then that's kind of where the rates were. Now it's different because instead of having a $120,000 sales price, now your sales price is $500,000 at 7%, right? Versus $120,000 at 7%.
Yeah.
I think what happened here too was medium income, hasn't gone up dramatically, right?
Yeah.
Housing has gone up dramatically, and I believe income hasn't followed that.
Yeah.
So 7% mortgage today is different than 7% mortgage then. Right. How we got through it, we weathered it. I think for about a year and a half when the market was depressed, we just got through it. We did a lot of $80,000 loans, and we had a lot of investors coming in and buying properties, and then we got out of it, and then we had a tremendous 12-year run. It was just an amazing 12 years. I think where I slowed down just a little bit was June of 2022. Slowed down a little bit where, we're typically doing like maybe 100 applications a month coming into, started maybe like 2030.
Yeah.
And then that started slowing down, 2023 slowed down. And, even this year, we when the rates came down a little bit a couple of months ago, our application count went through the roof. We had like 50 applications, right? And then the feds came out with some bad news, so the inflation ticked up and rates went up 90 basis points, and we slowed down.
Yeah, we saw it too. It's like 2 weeks in March, and I'm like, oh man, we're seeing multiple offers, everything's flying off, and I'm going high on my listing prices too. But that's kind of cool. I'm getting some flashbacks. When I came here, it was 2009, and we're depreciating 3% a month.
Yeah.
I'm calling people, prospecting every single day, and they're asking me like, how much is my house worth? It was like below 300,000, 400,000. It was crazy.
Yeah.
But we just did a lot of short sales to get through it.
Yeah.
And we saw a lot of people leave the business, which ultimately I think was probably a good thing for you and I. And then we got to have that run of 10 years or whatever. We're starting to see that now in lending and with agents leaving the market. So I think long term, for people that do this full time and are committed to this long time, it's ultimately be a good thing for producers in the market.
Yeah. I think just over the years, just seeing where the market has gone, like the all-time high of the market, let's say like 06, I believe we just kind of passed the all-time highs. Like, so I had this amazing house in Summerlin, right behind Temple Best Shalom, and that house had hit like 1.1, and I know for a fact that house is right now it's around like 1.2. So if you judge where the market was, like we dipped down so far in the market, with purchase price, that we're just surpassing it now, and stuff staying pretty solid with pricing. I could tell you like and you guys are knowledgeable much more than I am at this, but like there's nothing out there for under 300,000 that
we talk about it
for someone to buy, for some regular for a regular one person income in this town. Very difficult to find something at 300,000.
Very difficult. So, and even though that's why we've seen that condos, townhomes prices have jumped up dramatically too, because a lot of people are just having to kind of settle for those options,
just to get in, right? 'Cause, we've just kind of see prices, they're kind of flat right now, but I think what we're seeing is we have all the Californians coming in with cash, picking up properties, so that's kind of maintained our market versus it back in 2009 where things are just dropping like a rock. We're not seeing that this time around.
No, and you hear about foreclosures going up a little bit, and I just think it's a talking point for the media, at this point. But what you're not seeing is the person that has the 2, 3, 4% mortgages listing their properties. They're not. I don't think they're interested in getting a bigger house at 7% and having double the payment right now. And I think people are holding off a little bit until they have a better feeling on where our future's going in the next 6 to 9 months. So
it's hard to walk away from that 2, 3, 4%, right?
I agree with you, because that's always like, you're right. We hear it on the news all the time, like, oh, foreclosure, and that's just clickbait. Because let's really think about this. If you bought a house in the last 10 years, your mortgage is anywhere from 2 to 3%, so you have a low mortgage. You probably have equity. Why are you going to get foreclosed on when you could literally just put it on the market and sell it and take the cash out? So that whole story doesn't really add up, and that's why it's so different than it was back in 2009, where people were taking out 2, 3 mortgages, and they just thought that the market was going to continue to go up forever. And lending got more restrictive, which is good. So you have folks that actually have affordability to actually purchase. It got better. We had better quality, like better quality people with these loan programs, get them into homes. So I mean, it shows.
Yeah, well, you're right. Like, so back then, it was like the 80-20, no income, no asset, the Ninas, they actually call them, right? So you didn't really need a lot to qualify. And it's funny, not funny, but they kept dropping the requirement. Started at a 640, then a 620, then 580, then 540. So the requirements, they kept dropping.
Yeah.
And, people kept buying. But you had the people buying 5-6 houses all at once. I think the difference now is we do have some different programs out there now. Like now you do have the bank statement loans are out there, and there are a couple of different loans. But for the most part, there is not stated income loans. So you have to have some type of proof that you're actually making money to repay back.
Right, exactly.
But there are some loans coming out there. Like I see a loan that's pretty common now, because I think a lot of people were staying away from the home equity line of credit when they were doing refis. And the reason why is because the equity line was adjusting so rapidly that it was very difficult to keep up with. Now there's like closed-end seconds where a lot of people are coming in and they're getting like, if they need $50,000, it's $50,000, but it's fixed at like 8%.
Right.
So it's, it may be a little higher than where the equity line would actually start, but the equity lines are in the 11s. So it's.
Oh, that's interesting.
Well, that's good to know. I mean, it's like we talk about all the time is go get the house, because I think, and like we saw it in March when they just crept under that 6.5. Your applications went up. We had like 20 offers on our listings again. That was at 6.5. So what do we think is going to happen when they start coming down again? And we talk about on the spot all the time is like, you got to pick your evil. Right now, if you're thinking about getting into the market and buying, you don't need as much money. But I think with the market shifting, and they're getting rid of co-ops to pay, sellers are not paying co-ops anymore. The buyer's going to pay that. And then obviously if you have 20 offers on a listing again, they're going to be looking for the folks that have cash, and the folks that have cash are usually from California. So just a thought, because this market is probably a year or two away from shifting again. What is, just kind of segue, what is your projection over the next year or two? And we won't hold you to it because we know there's not a crystal ball, but like we want to just keep giving people information because it does change here and there. But we can kind of see 6 months out, give or take a little bit. But we like to kind of project a little, kind of get people so they have an idea of the future. And what's your thoughts?
My thoughts are, it's really dependent on where the election it ends up, in my belief, right? I think that things will get better. I think inflation will come down. I believe interest rates are gonna start ticking down a little bit. But it also, if they tick down too fast, you could almost have like a reverse recession, like in a sense, because now you have everyone who is refinancing and everyone who is trying to buy, and that could also kind of hurt us just a little bit. But I do see, us getting better once we start getting towards the election. I believe that, politicians are politicians, right? So whatever they could do to affect in that short term of where the market's going to be, I think, we'll see, better interest rates in the later part of the year. Yeah,
I agree with you. Yeah. I think there'll be some things that occur that is going to help stimulate the economy, and I wouldn't be surprised on that at all.
Yeah, so. I mean, I just think where we're headed, I think we've had a great run, and how the cycle, I think we're at the end of when the market crashed, previous years, and like the 2009 time, like there was about a year and a half, and I think we're at that year and a half mark now.
Right. Yeah.
And I think economists and people are figuring out, because they know it's very difficult. It's not just the house is expensive now, it's like everything else that comes along with it. NV Energy, believe it or not, they just lowered some of their premiums because they're getting natural gas a little bit cheaper, so they just dropped their premiums a little bit lower for people who can afford some of it. But everyday things are getting a little more expensive, and it's keeping people from doing other things that they want. So I'm really hopeful and I'm optimistic that we're going to have a great end of the year, and I think things will start to loosen up, and we'll people will stop moving on a little bit. And
Absolutely. Yeah, and I think we have a grand a year. We don't. If you're in lending or if you're in real estate, just keep making your calls, keep building market share, right? So we don't know exactly when it's going to occur. I hope it's the end of the year, just like you. But I agree. I kind of hope it kind of ticks down slowly, to be kind of honest with you, too, because it can get a little crazy. And I don't think it would be a good thing. Hopefully, we learned having interest rates in 3% for like 2 years wasn't the best thing, right? I got it when like you had to stimulate the pandemic, so you got to stimulate the economy. But why did we do it for 2 to 3 years? It made no sense.
It was free money. I think what was going on inside the economy and with I think it was just where they wanted to stimulate, and I think we overstimulated.
Yeah, for sure.
Yeah.
But coming out of it, I think we've learned a lot of valuable lessons. I love what you just said about keep making your phone calls, because what happens is when you're in this industry, someone may not be looking to buy today, but that one phone call you make, they're ready to buy, and it's being in front of your prospects, is being in front of the consumer. It's educating your team, educating the community. And when we stay, in the front of the community, they remember, who's the market expert for them and who really cares about them.
Yeah, that's a great point. You gotta stay in the forefront. So, and just be of service. Be of service nowadays, and you plant those seeds. You never know when they will come back and need assistance, right? So, yeah.
They will. That's why I have a lot of long-term clients, like clients I've worked with for a long time, and I still talk to them to this day. And the database, the past client database, and reaching out, and sometimes it's just that check-in call.
Yeah.
Yeah.
I appreciate it.
To see how they're doing, what's new. And then, they always seem to refer one of their friends or family over that's looking to buy, or someone may be going through, some troubles with finances, and they'll just ask a question on like the opinion, right?
Yeah.
And that's what we're there, just to help them. So give them honest opinions or what's going on and how we can serve them. And that's always worked out well for us.
Yeah, for sure.
Well, you can tell you're very good at your job, and you're coming from contribution, so that tends to really help in our business. So,
yeah, for sure.
Absolutely. So, keep making your calls out there for sure. But so tell us more about besides real estate, mortgage. What do you do for fun?
Man, believe it or not, I exercise a lot. Like I own a health club, and I bought it during the pandemic. So who buys a health club June of 2020, right?
Wow.
And mind you, it's not just a small club. It's a 25,000 square foot facility.
Wow.
50 yards of turf on one side, large weight room. But I got into it during the pandemic because of all that. You heard a lot about mental and physical health.
Yeah,
and what we started doing when I bought it was we gave a lot of free membership. So if you were laid off or furloughed, unemployed, come in that way, because a lot of people weren't really doing much during the pandemic, right? And you can go outside for so long, but like places were closed. So we wanted to give back that way when we very first opened it, and now we've grown it, and we have over 650 plus members.
Wow.
But we're a little more than just a health club. We were the very first company in the nation to host an American Job Center. So what American Job Center is, it's a government-funded program, and they look to help. Mine is what they call a UTUB, so we cater from 16 to 24 years of age, so kids can go in there for resources, jobs. So I hire people from this program, and they start with work experience. So say they've never had a job before, they'll come in and we'll give them the work experience, and then they'll graduate from work experience to on-the-job training, and then from on-the-job training, they become a full-time employee. Now, sometimes they don't always stay on with me, but I did my job in the community with giving them that experience. That way they can go and get a meaningful job that pays, well into the $20 plus an hour. The average kid can go get a job at, I don't want to say Chick-fil-A because it's probably a little bit harder, but a regular fast food place always hiring, right?
Yeah.
But our goal in this community is to give them the upskills that they need to go into the next, path, right?
Yeah.
So that's been a blessing to have that. Then we have the nonprofit side, which is Movement Gives Foundation. So when I opened the Movement Fitness, it was always meant to be the profit that came in the Movement Fitness would always go back into the nonprofit to serve the community. So we do like post-cancer. So once what happens is once you get out of like treatment for cancer, they say, hey, go exercise and eat good. But if you never exercise or ate good, how do you know?
Right.
So you come down to us. It's absolutely free. Doesn't cost you $1. You work with one of our PTs that we have a relationship with UNLV. So we work with their kinesiology department, their nutrition department, and what we do is we serve the community.
That's
right?
amazing. Yeah.
Serve the community through that. And then the second layer of the nonprofit is the financial literacy piece that we just introduced into Chaparral High School. So for the school year 24 and 25, we'll be in there teaching a 7-week course on financial literacy to the ninth graders.
That's important.
So
That's phenomenal.
Yeah.
It's so funny because we're reading a book right now, and it talks about how we rank children versus like really figure out what they're good at, and we don't talk about that stuff in school. We get all this information, we take these classes and all things, but a lot of it we don't really like apply.
Yeah.
So that's amazing that you have all these programs, by the way, but that one specifically, that's pretty neat.
Well, and it's also, so how we bridge into that is we want the youth to go home and have this conversation with their parents, right?
Yeah.
Financial responsibility. And financial responsibility is not, we can teach it from a micro level, and they go home and teach their parents, and then their parents can also join in it, in the financial literacy program.
Yeah.
So we'll give them it all. We have some great funding for it. So what we do is we donate to every participant who graduates the program. We donate $25 towards their first savings account.
Wow.
Right. So we really want them to learn how to save money at a young age. Is very, 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 important for us, for them to save money, learn how to save it while they're young, right? Not just go and spend money. But that's been a great program that we were able to launch, and we work along with the district. The district has been a great partner for us, and guiding us through this district's a little different. You have to learn how to navigate it. But there's been some great people that's been helping us get through it. So
Nice.
it's been great. It's been really good.
That's great.
Yeah.
Well, you can tell why you're successful. You come from massive contribution to the community. So thank you. I haven't been affected by it, but I appreciate anybody that helps our community. So
Yeah.
that's very generous that you do all these things.
Well, and if you think about it, a lot of these kids,
Especially in this town, I feel like the schools aren't the best. Like I think we need better leadership, and you're you've proven that. To help,
Thank you.
tell us some of those stories, right? Because I'm sure it sounds like you've helped a lot of kids, and I think we need leaders like you helping them.
Yeah.
Well, that's when they come in. That's when the mentorships they come in with mentorships, or that's when I enroll them into the program that we have at the hub. The 16 to 24-year-old, we can enroll them into one of the programs. And again, the mentorship has always been huge. But I think where it comes in, because I am in the financial world, I get asked a lot, how do I buy a home, right? So we get to educate them on home, buying,
Right.
on what it would look like to own a home at a young age. And
That's great.
we could talk about that, but that's where we would bridge in together and bring you guys in and have that conversation.
Yeah.
And I don't ever think it's too young to have that conversation, because we know that home ownership leads to wealth.
Yeah.
For
Right.
sure.
So own a couple of homes. And I heard this, and this was a true story. A guy once said, he goes, what was the biggest mistake you ever made in real estate? And his comment was selling. He's like, I should never have sold any of my properties, because everything was worth double of what I owed.
Yeah.
So just hearing that, and I'm like, wow, it's so true, because my first house was 5136 Zoroaster Street, right up the street, and I paid like $280 for it, or $180, and right now it's worth like $600.
Yeah.
Yeah.
But I bought that house in 03. So if you think about it, 20 years later, it probably would have been paid off, and I would have had positive cash flow coming in from the tenants, and all that equity was mine. Right?
Yeah.
So you don't know what you don't know at the time. I'm a little older now, so
And wiser.
yeah, a little bit.
No, that's a great program.
important.
I bought my first house, I think, when I was like 22 years old, but I was really lucky. I was in real estate since like I was a little kid. My parents were brokers, but I'm assuming most parents aren't having those conversations with their
Yeah.
kids. So that's huge, because the reality is, like, you're 22 years old, you get a job, you save money, you can buy a house in 2 years.
Or you can get a gift, right? Like
That too.
You can get a gift. You go in your first house. You can go like FHA, which is kind of like a first-time home buying program, 3.5% down.
Yep.
You can get 100% of the money could be a gift. So let's say hypothetically, your dad don't want you living at the house anymore, right?
Yeah.
You're 22. He wants you to go and live on your own. So dad can give you the 3.5% down payment, and you can go have your own home.
Yeah.
Right, so there's some great programs out there, and at a young age, it's a great time to get into it.
Yeah, for
great
sure.
Great time.
Yeah, and just if you buy a house when you're young, usually you have young friends that need a room to stay in. You rent it out and it pays the mortgage, guys. and then go buy the next house.
It's
So
funny. I have a member at my gym. His name is Steve, and he does that. So his mortgage payment is covered by his 2 renters.
oh, right.
So he doesn't
That
pay
easy.
anything. He saves money and he lives for free. He says.
Yeah.
So.
That's great. Yeah, one of my
glad.
buddies, this is like when we first moved to Vegas, same way. He always had his house rented out, and I'm like, that's genius. And he never paid his mortgage because they paid it. And you have people in there, but it's smart and it's savvy.
Yeah.
So
Yeah.
I want to dial back because I'm kind of like curious. So you were talking about buying a gym, and it was pandemic when it first started, because I remember when we were going through it, and team lead, we have a team about like 10, 12 people, I don't know what it is. And everybody's telling me not to go in the office and not do this. And everything in my gut was saying, continue to move forward. And we did. Nobody showed in our office except for our team. And it helped us financially. But that had to take a lot of guts. Because like walking into a real estate office, making some phone calls, that's a lot of guts. Like, I'm going to buy a gym in the middle of the pandemic. What I got to know what's going in your mind. What did it look like in the beginning? Like, I dive into that a little bit.
Very impulsive. I wanted a place where I could go and work out, because most places they were closed down. I saw some opportunity, but I had a big vision of what I could do in this community. We're on the east side of town, so you have UNLV 2 miles away, you have the health district, you have the school district, you have Help of Southern Nevada with the homeless youth, you have Chaparral, you have a lot of these underserved communities there.
Yeah.
And I just wanted to make a difference in people's lives. And I really honestly believe that through physical health, you can achieve that. I think when you work out, when you see your body transforming, like I just turned 50, and like I work out pretty much, like do cardio or working out almost like 6-7 days a week. But I'm lucky because I have a health club to do that in. Yeah. But I believe that when people start changing their body, their mind start changing, and they become really productive. And when they're really productive, we become better citizens. Yeah. And when we become better citizens, we get better jobs. When we get better jobs, right, we can help other people. Yeah. And I think it's this cycle of really like being conscious, right, of change. And I think it starts with your body. I think it starts with your mind, your body, because your mind has to tell your body, hey, you can do this. Hey, I'm sore. Hey, like my biceps killing me, right? Because you're moving stuff and you're getting physical. But when you get past that, the reward of it is like you in business. It's success.
That connection with the body is important. I've learned that through exercising. You're really in connect with your body. You learn how to listen to it more, and it just makes you overall just a better person.
It starts the day off right, and you get those dopamine effects. Absolutely. I talk about that on the pod always. Like specifically, we'll go into sales, but the best salespeople that I've experienced are either former athletes or folks that work out, and it all applies. So
athletes,
you bring up a really good point.
Military, like I think just because it's the discipline, like to get to the next level is discipline.
Yeah.
Right? If you have some discipline in your life and you weren't an athlete and you inspired to be or something, it's just discipline.
Yeah.
It's just taking that next step and just standing in the fire and just going for it.
Yeah.
Making a conscious decision that you want massive change.
Yeah.
And it just takes a little bit.
Absolutely. I think you're on the nose, because I think it's, especially in life and in sales, whatever you want to talk about it, it's like those little details
Yeah.
that add up, and it's a compound effect of that. Working out every day, making your calls, taking care of yourself, eating healthy. So that's great. You give all that information to the community and give back.
Like you said, like it's when you're going into the office during the pandemic and you were making the phone calls, that's really where it counts, is being consistent. Being consistent is key to a lot of things in life. Is having that consistency to be the message.
Yeah.
Right, and you guys are doing a great job of it, and I'm super grateful I got to hang out with you two guys and be on this podcast, because it's exciting to share information and this community.
We
Absolutely.
appreciate it. Yeah.
Thank you for coming on. It's a pleasure. You got some great stories. We're gonna have to definitely get you on again. The best dressed guest on Running Vegas.
Yeah.
Thank you, Mr. Rodrigo, best co-host in the business. Derek, thank you for being on. If you guys need a mortgage or you want to go work out with this man, hit him up. This is Running Vegas, guys. Take care of yourself.
Bye, guys. Thank you.